Subscribe to my channel Report Stock.
Welcome to the deep dive. Today, we're digging into something pretty interesting in tech earnings. We're looking at how a company, specifically Synopsys, SNPS, they're big in chip design software, how they can miss their quarterly numbers, but their stock is actually, well, flying high. So our mission is to pull out the key takeaways from our sources for you, figure out what's really going on, and we'll even take a quick look at another company in the same space.
Yeah, it's a great example of that classic market disconnect, isn't it? What's fascinating is how these immediate results, they often just don't tell the full story. Investors are always trying to look ahead, not just backwards. And that's crucial for companies like Synopsys.
Okay, let's unpack this then. So Synopsys reported Q3 earnings. This was for the quarter ending July 2025. And, well, our sources show they missed the Zacks consensus estimate. That's the average analyst forecast, right?
That's right, yeah, the consensus.
They came in at $3.39 per share. The expectation was $3.84, so that's an earnings surprise of what? Almost minus 12%.
Minus 11.72% to be precise. It's a noticeable miss.
And revenues missed too. $1.74 billion reported, but the consensus was looking for $1.77 million.
Yeah, so misses on both the top and bottom lines. But this raises a really important question, doesn't it? How much weight do you put on just one quarterly miss like this?
Exactly. Is it just a blip?
Well, if you look at their recent history, Synopsys has actually beaten both EPS and revenue estimates 3 times in the last 4 quarters. So, this quarter definitely stands out against that stronger track record.
Okay, but here's the part that gets really interesting. Despite this Q3 miss, Synopsys shares year-to-date are up about 25.5%.
Wow.
Yeah, and that's smashing the S&P 500's gain, which is around 10.4% over the same time. So what gives? How do you square that circle? Missed earnings, but a surging stock.
It's a fantastic point. I think the real insight here is understanding that market sentiment. It can sometimes run ahead of immediate numbers, especially when there are strong long-term trends involved. For Synopsys, investors might just be looking past this single quarter. They might be focused on the company's absolutely critical role in chip design. I mean, that software is essential for everything from AI to the Internet of Things. It's a huge tailwind.
Right, the strategic importance.
Exactly.
Yeah.
And their industry often works on these really long multi-year cycles.
Yeah.
So one quarter might not reflect the full pipeline or the long-term contracts.
So investors are kind of betting on the future, maybe more than the immediate past performance. But what about those earnings estimates? You often hear how crucial estimate revisions are for stock prices. What do our sources say there?
You're hitting on a key mechanism. Well, sure, the immediate stock reaction can be about what management says on the earnings call. For the slightly longer view, that earnings outlook is really critical. There's solid research showing a strong link between how stocks move in the near term and the trend in earnings estimate revisions.
Okay.
And here's the twist. Our sources point out that before this latest report came out, the estimate revision trend for Synopsys was actually, well, unfavorable. It had led to a Zacks rank #4, which is a sell rating. Basically, analysts were expecting the stock to underperform before this miss.
A sell rating. But the stock is up over 25%. That's quite the divergence.
It really is. It highlights that tension between backward-looking analyst revisions possibly catching up and the market's forward-looking optimism.
So what are the current consensus estimates looking like now, post-report? What are analysts expecting next?
Okay, so for the coming quarter, the consensus EPS estimate is sitting at $4.61, and that's on expected revenues of about $1.94 billion. For the full fiscal year, the numbers are $15.13 for EPS and $6.77 billion in revenue.
Right. And the industry context, is it a strong sector overall?
Yeah, that's worth remembering, too. The computer software industry group that Synopsys is in, it's actually ranked in the top 39% of all the industry Zacks covers. And historically, industries in the top half tend to outperform the bottom half. So the sector itself has some strength.
Okay, so that helps provide some context. Now, just to give listeners a bit more perspective, let's bring in that peer company. We looked at Progress Software, ticker PRGS. How are things looking over there?
Yeah, Progress Software offers an interesting contrast. They're expected to report their Q4 earnings soon for the quarter ending August 2025. The expectation there is for EPS of $1.30. That's actually up 3.2% year over year, and revenues are expected at $240.35 million, which is a pretty big jump, up 34.5%.
Okay, so positive growth expected there. What about the estimate revisions?
That's the key difference, perhaps. Their consensus EPS estimate has actually seen a positive revision recently. It's up 0.3% over the last 30 days. So with Progress Software, you see a more, let's say, straightforward picture. Positive expectations, positive revisions.
Got it. So wrapping this up a bit, We've seen Synopsys with its recent earnings miss, yet that really strong stock performance this year, it really highlights how one quarter isn't everything and how those future outlooks and estimate revisions play such a critical role, but also how the market can sometimes get ahead of those revisions.
Absolutely. What really stands out, I think, is that no single piece of data gives you the whole picture, right?
Yeah.
Especially in a fast-moving area like semiconductors and software.
Yeah.
You really need to understand the nuances, like what's the difference between a one-off miss and a longer-term trend? Or how much is the market already pricing in future growth? That's key for you as a learner.
Yeah, so for you listening, this deep dive hopefully shows that while the current numbers, the quarterly reports, they definitely matter. It's often the direction of future expectations and how the market is reading those tea leaves that can give you the most valuable clues about where a stock might be headed.
Exactly. It's a reminder to always look, a little deeper than just the headline earnings number. Consider all the tools and perspectives available.
So maybe the next time you see an earnings report flash across your screen, pause for a second and think, what's the real story the market is reacting to here? Is it the past or is it the anticipated future? Definitely something to mull over.
Subscribe to my channel Report Stock.